All right, now in 2017, the first year of FinTech Junction, investors plowed more than $16.5 billion into fintechs. Just shy of 1,130 fintechs were invested in. According to CB Insights, the money shifted from Asia towards Europe and also from early stage startups to more established names. Have these trends continued? Well, I don't have the answer, but I know someone who does. So I'm going to invite the moderator of our first panel of the day, which is on founders, investors, and CEOs on the most exciting trends in fintech today. Ladies and gentlemen, please welcome iAngel's co-founder, Mor Assia.
You hear me? Perfect. I'd like to introduce to the stage our esteemed panelists. Let's start with Aviv, co-founder and general partner of Viola Group. Can you join me on stage? Here we go. Gigi Levy-Weiss, founding partner of the NFX Guild. Oh, careful. Inbal Avi, CEO at WebPals Group. And Yoni Assia, founder and CEO of Vitoro. Thank you. Welcome. Perfect. Okay, great. So thank you everyone for joining our panel discussion this morning. Again, my name is Mor Assia, founding partner of iAngels. With us today, we're going to talk to entrepreneurs and investors about the major trends in fintech for this year. Now, generally, fintech industry has been enjoying a lot of conversation this past year because we're seeing some major technological disruption making its way into this more traditional industry.
Stage, the microphone.
Great. So we're seeing major technological disruption in this fairly traditional industry. In this industry's efforts to stay more relevant in this fast-paced world. So we see AI solutions becoming invaluable in money management. We see cyber solution becoming more and more important as cyber attacks are more fears and they have major financial consequences on the banking industry. We see blockchain taking center stage in all conversation as the user wants to have more power, control, flexibility in managing its financial assets. So there's a lot going on. Financial institutions understand that, and they're looking to technology to help them cope. Now, I want to kick off the conversation with really understanding investment trends in fintech in Israel. Now, although we have all these observations, and technically the ecosystem is thriving, we saw a decline in the number of deals that are happening in Israel, and a 21% drop in the amount of money raised. So what's going on? How can we understand that? Avi, maybe you have a viewpoint on that.
I believe it's actually a very healthy phenomenon. I believe that the fintech sector have been hyped now for quite some time, and sophisticated investors realized that both for disruptors and for enablers, it's not so easy to really build a standalone global category leader. And I believe that's the main reason that we see that all over the world, by the way, that the number of deals is going down. Having said that, still very good companies get funded. We see Toro, we see Bluevine, we see Fundbox, Payoneer. So good companies get funded, and also early stage good companies get funded. If you come to look at the underlying phenomena, why investors are kind of a little bit more careful with early stage and also later stage fintech investment, it has to do with the market dynamics. If you look both at the disruptors, we see that they are becoming consolidators. They start with one product offering, and they start to consolidate. And actually, Cross River Bank is a very good example of that. And in order to do that, they need to build a platform, and not every feature company or product company is built as a platform. So it cannot be a consolidator at the end of the day. And if you look at the financial services organization, they also don't want to deal with hundreds of vendors and suppliers. So you can penetrate the organization with a niche solution, but it has to be built on a platform that can later on provide more and more services. It has to do with the customer acquisition cost, both on the consumer side as well as the financial services side. On the B2B side, both of them are very costly, and you have to justify them by being actually a platform, a wider product offering that a niche feature-like type of company. I believe if you look at the fundamental, that's the main underlying reason for the reduced number of early stages deals. Still, good companies get funded. There is a lot of good money, very smart investors around that have been around for quite some time and understand what does it take to build a real company. The other phenomena that we see is a huge consolidation. If you just look at PayPal, for example, they raised $9 billion, and they're going to use that heavily to acquire companies. Last week, they acquired 2 companies. A month ago, they acquired another company for $2.2 billion. So we'll see a lot of consolidation happening in this market.
It's very interesting. I want to maybe touch on Inbal, because you've been an active acquirer, actually, of many sites abroad in the US as well. Your offering is really tailored to face the consumer and maybe tailor acquisition of consumers. So how do you observe kind of like the trend that we're seeing of how users want to have more control, users want to have a very unique kind of user experience, and what is your observation from the acquisition dynamic that you encounter?
So I would definitely say...
Let's try again. Go.
Okay, it's working. So I would definitely say that we are seeing that the user is trying to educate himself more and more, and people are not just going and buying some kind of a product without actually doing the research and trying to get the most relevant information in order to compare the different products, the different options that they have. And that means that they would go and look, for instance, in comparison sites such as those that we have been acquiring at WebPulse in the past year, in order to try and find the most tailored product for their specific needs. It doesn't matter whether it's investment or loans or mortgages or credit cards. They will look for the most relevant alternative, and they would do their research for that. Now, we are witnessing first-hand that eventually the content that you need to provide such users cannot be just a very static article. It has to be very engaging. It has to come in all shapes and forms, whether it's videos or all sorts of calculators. So for instance, if you are looking for your first home, we would provide you with calculators to see whether you should rent or buy, whether, or what is your home affordability, as well as what should be your mortgage payment, and according to that, assist you with finding the relevant product in order to take that mortgage. So I would say that, the users cannot be approached anymore by just a very simple content approach or by some kind of an aggressive marketing message, definitely in the fintech world. Now,
Excellent.
also...
Excellent. Now, so users are becoming more sophisticated. Marketing needs to be, take another step up. Yoni, can we discuss a little bit what's going on the platform? So eToro is the world's leading social trading platform. You have been a category leader in social trading for many years, but now this past year I've been putting a lot more focus on blockchain and crypto and token investment. So can you share with us maybe the uprising of a new type of user, or how do you kind of cater to that dynamic of, in terms of marketing, user acquisition, user experience?
So I think what crypto really did is it woke up a new type of audience to the world of basically trading and investing. So most users, let's say our average age is 34. We have 10 million users. We've seen an increase of hundreds of percentage last year in our business. And it's a new type of user because these are users who haven't been in sort of fintech before. They haven't traded, they haven't invested in anything, they've never bought stocks. They're not, all of our users are not from the US, where basically stock trading is less popular. And we've seen basically a waking up for a new generation, for Generation Y, who are now suddenly interested in finance and in assets. Obviously, they're interested in it because of unrealistic expectations of making 1,000% returns in 3 months. Nonetheless, it's very interesting to... That's unrealistic. Maybe realistic once. So I think that's really what we're seeing. We're seeing suddenly this new audience. FinTech is generally much harder than consumer tech because people actually need to actually move 100 times more money in FinTech. So what you pay for in a regular tech business, $1,000, in FinTech, you need, for this same company to make money, you need to move $100,000. So it's a much harder business where you need to gain trust. The fact that now a new audience is waking up to that industry is what's making a lot of the recent sort of uprising of FinTech.
Okay, excellent. I want to get back to investments. So Gigi, I know you guys at NFX Guild have founded a VC fund, but you also have been very active yourself in advising and in helping blockchain projects from the very beginning. So tell me, what do you find interesting these days? What is your focus when you're looking for investment?
Yeah, so first of all, we do blockchain in the fund. So, you know, our fund can also invest in tokens and not just in equity. And so that's all under the fund. I think that there's something interesting that's happening in the world right now, which is, you know, William Gibson said that the future's already here, it's just not evenly distributed. And the reality is that most of the fintech innovation that we're seeing today have been around for a while, and it's just, you know, we're waiting now to see who the winners are going to be. So when you think about starting a new company in, I don't know, in remittance, there's already hundreds of companies in remittance. Some of them are bigger than others. There's really not a reason to start another startup in the field. And so what we're seeing more later stage investments in the companies that are actually starting to rise above the noise, and they're getting a lot of money to become category winners, right? So that's why there's less and less seed investments in the areas that we all understand. Therefore, as a seed fund, what we're looking for are the new technologies or the new areas where there aren't really, not just not incumbents, but there aren't really even the new startups that have been working for 4 or 5 years. And one of these areas is blockchain. Blockchain both as underlying technology and as a new financial instrument. I don't know how many of you really know how rotten the systems are of major banks, of traditional major banks, and even exchanges, right? So, you know, there's like this analysis that I think I heard that if you stop the trading on NASDAQ at any given point, there's like 3% of stocks that you can't account for because they're being lended or they're overnight trading and so on. So there's, you know, the infrastructure is really bad, and so blockchain can solve that on a technological basis. That's one thing interesting. The second thing is that cryptocurrencies, and I'm not talking now about, you know, that doesn't matter whether it's alts or mains, but at the end of the day, they're a new financial product that needs a new financial infrastructure. So that's something that's very interesting for me as well. Then on top of it, if additional areas where I think are for the first time really possible, the first thing is the regulatory changes that we're seeing now mostly in Europe but all around the world, basically force the banks to share data and force the banks to share user data in a way that suddenly makes it much easier for new disruptors to come and not even build everything. You can be a service aggregator, but as a service aggregator in a brand, you can suddenly offer, because of these new regulations, you can offer services like a main bank. And that is something that's very interesting, and I'm looking at. Another thing, of course, is AI and the ability. AI is machine learning, and also AI as in a way to interact with customers. Both of them, when we look at, you know, robo-advisors and asset management, the interaction based on a machine learning algorithm that learns you is important, but also in general, the ability to suddenly analyze huge amounts of data very quickly and provide a totally different level of service is something that we're really interested in. So these are kind of the areas where there's new technologies, new disruptions that allow for new types of companies to be created. If you're trying to do another one of these, like another eToro or another this or another that, the time's probably too late for this.
Interesting, great. So I have another question for Avi in this regard, because when we're looking at early stage investments in Israel, most often entrepreneurs turn to either angel investors or local VC funds to support their ventures and really take them to the next milestone as they open up globally. Now, in this very unique dynamic where you can either raise from a VC or you can go down a different route, like doing an ICO, for example, and raise from thousands of investors from all over the world, this has a lot of implications on one side, investors and local VCs, and on the other hand, the entrepreneurs and their set of expectations for funding. So how do you overcome that, or what is your observation regarding this?
I believe that it's very good for entrepreneurs to have a wider option world for funding. It's a very good phenomena, and I believe each case has its unique characteristic and thus needs a unique funding ecosystem. Early stage is still a very local business, and if you see most of the early stage fintech investment in Israel are being done either only by GPs in Israel or by a combination of GPs in Israel and combination of funds from abroad. Having said that, I believe the world is global. Our company is by definition are global in the absence of local market, so we co-invest with everybody, and actually can tell you that all of my companies are headquartered in New York, so that's a sign, and have been co-investing with all the leading fintech investors around the world. I believe the wider world of option and more options entrepreneurs will have, it will be better for the industry. They still need to be selective whom they team up with. It's a long-term partnership, and they have to understand it's not an overnight success. It's a long road out there.
Okay, so Yoni, you're as a fintech entrepreneur. So eToro now is in existence for 10 years. You see today blockchain projects raise huge amounts of money before they even have a product, before they necessarily have a team. What is that? How do you feel about that?
I think first of all, you need to look at fintech as fintech before blockchain and fintech after blockchain. So it's like thinking about I don't know, consumer technology, global consumer technology before the internet and after the internet, and we're really, really early stage in the blockchain industry. And what we are seeing more and more, even eToro, we're actually investing in ICOs and investing in startups that are related to what we're doing, and we're seeing that a lot in the crypto industry. So actually companies becoming sort of corporates and investing in ICOs because it's super interesting, it's super liquid, and if you are in the ecosystem, it's very relevant for entrepreneurs to actually raise money, which is actually much easier than raising money from VCs.
Okay. Great. Do we have any time for questions? Okay. So thank you, everyone. Thank you very much for joining me. If you want to hear more, you can join us on the blockchain track after lunch. Thanks. Have a good day.
Thank you, Mor, and to all our panelists.